Here in this video, we will be going over all of your Tesla stock breaking news today. But unfortunately, what's going on with Tesla stock and the broader markets together, I can't make sense of it. So let's actually start there. Tesla stock is down about 2.5% at the time of recording this video. Now, I can think of maybe some reasons that don't make a whole lot of sense to why Tesla could be down 2.5%. Like a lot of Tesla's competition ran Super Bowl ads. Tesla did not. Is that something Wall Street's saying, you messed up, Tesla? That doesn't sound like a good thesis to me. But you're really not getting any bad news today for Tesla stock. If anything, you're actually getting good news today. But take a look at this. The NASDAQ is red today. Like red almost 0.1%. Pretty small day, but still red. The Russell 2000 is up 1.83% at the time of recording this video, but the VIX is up almost 6%. Now, if you guys don't know what controls the VIX, I'll tell you. It is puts and calls on the S&P 500. So when there's more puts being bought than calls, the VIX goes higher. Now, on a 6% day for the VIX, there's probably a 2-to-1 ratio, or close to 2 times as many puts being bought for every call, which the VIX going up 6%, even as the NASDAQ is down 0.1%, the S&P is up 0.1%, is pretty dang rare. But it's even more rare to see the VIX up 6% when the Russell 2000 is up almost 2%. The Russell being up 2% is very risk on. The VIX being up 6% today is very risk off. So none of what we're seeing here makes a whole lot of sense to me as an experienced trader. I mean, then when you mix in Tesla stock being down 2.5%, maybe you could draw a conclusion that this is one of those sell first, ask questions later kind of things. Now, a reason for this hedging today is for the CPI report coming tomorrow. Now, normally you don't see this kind of spike in the VIX before a CPI report. That's pretty unusual as well. Now, we'll go over my expectations for CPI in the next video, but we're really not expecting anything too drastic here. We're expecting the same 0.3% on your month-over-month core year over year to decline a little bit to 3.8%. Headline month over month to stay the same at 0.2%, same as last month. And your year over year to actually fall from 3.4% to 3%. I mean, it looks pretty tame here. If anything, expectations, I think, could be on the high side, and maybe we come in a lot better than expected. But then when I think about that logic, I say, hey, that makes sense why the Russell 2000 is up. But then I look at the VIX and I say, that doesn't make sense. Why are so many people fearful and running out and buying protection? Maybe just because who knows what ultimately happens with the CPI report, but potentially there's another reason. Maybe, just maybe, you could make the argument that if CPI comes in lower than expected tomorrow morning, that the Fed could move more aggressively with cutting rates. Now, think about who dominates the S&P 500. What companies? This is a no-brainer. This is, the easiest question I've ever asked anyone ever. Microsoft, Apple, Google, Nvidia, Amazon, right? You understand these large tech names. If the Fed cuts rates, 2 times or 3 times or 4 or 5 times, it doesn't affect these companies. These companies, they have fixed debt, if any debt. Their consumers don't rush out and buy, Microsoft cloud products or H100 GPUs that cost $30,000 based on whether or not the Fed is cutting rates or raising rates. If anything, you can actually make the argument big tech could be hurt by the Fed lowering rates, especially a Google or an Amazon, your cloud-based services, because, you don't potentially have to be as effective in your advertising efforts if, money becomes cheaper. So long story short, without getting into too long of a tangent here, if the Fed has a justifiable reason to cut rates quicker than expected, your big tech names may actually fall, and you could see a broadening out of our markets, kind of like what you are seeing today. That could, in theory, actually bring down the S&P 500, which would make sense why investors are hedging the S&P via the VIX being up 6% today. But it would also make sense why the Russell 2000 would do very well tomorrow. And that's exactly what's happening today. So, yeah, unexplainable at the very least. Now, President Young Biden came out and made a couple interesting statements that I think are noteworthy to point out. And I'll explain why. Biden says, "We know prices are still too high." He then says, "We're calling on corporations to pass savings on to consumers." Now, let's be honest with ourselves. If you are POTUS, President of the United States, you know what the dang CPI report is going to be like tomorrow. Based on those two statements from Biden, it doesn't sound like it's going to be a super good number tomorrow. I mean, if the inflation number theoretically was good and Biden knows about it, I don't think he would be asking corporations to lower prices. So maybe that is feeding into the conundrum that we are seeing today. And maybe Tesla stock is selling off 2.5% because someone already knows that the CPI report could be on the hot side. But I still think that's pretty unlikely based on the CPI data that I have looked at. Some of your rent prices, your leisure, travel, hospitality sectors, hotel costs are getting cheaper. I mean, look at Expedia earnings. People are really slowing down on that aspect of the economy. If you look at restaurants, go to your local restaurant. It's probably not as busy as it used to be. There's a lot of signs out there that inflation is probably slowing down, but to get a one-off CPI surprise, well, it wouldn't surprise me all too much. Now let's get into all of your Tesla stock news today. See, and this just spins my brain even more because Tesla is down 2.59% at the time of recording this video. But if you look at hedge funds and institutions, it's the most bullish number we have seen in a long time in option activity from those firms. You have seen 588 orders totaling $317 million with a positive order value of 73%. If you take a look at the entirety of the volume from retail, hedge funds, institutions, money managers, 60.36% of the volume today is to the call side. 39.64% of the volume today is to the put side. That is a put to call ratio of 0.66, almost 2 times as many calls being bought today than puts. That's very bullish numbers. But potentially another factor that is driving Tesla stock lower today is the jump in short interest. Short interest jumping from about 2.9% to 3.28%. That is a jump from about $15.2 billion sold short in Tesla, now to $17.59 billion that is currently sold short in Tesla. That is a jump of over $2 billion. And you are seeing a lot of demand to short Tesla stock today. You can see the cost to borrow fees are now back to about 10%. Higher the cost to borrow fees, higher the demand is to short Tesla. You are seeing a big broadening out of this market. Obviously, with the Russell 2000 moving higher today and the index is not really doing too much, you are getting more stocks that are participating incrementally in markets today. You now have 60.7% of stocks above their 50-day moving average. That is an increase of 6.28% of stocks crossing above their 50-day moving average just today alone. Now, you're a far cry away from your 86% of stocks above their 50-day moving average back here on December 28th, precisely the same day that Tesla stock hit its high of about $265 per share, and subsequently, well, the rest of that is history. We recently hit about 45% here of 45% of stocks above their 50-day moving average. Now you're back to about 61%. Pretty good, but still a long ways to go relative to the S&P and the NASDAQ trading at all-time highs. The average stock is not. Taking a look at stock twits and the sentiment around Tesla, it is extremely bearish today at 18, even more bearish than yesterday's number of 28. Not great, but makes a lot of sense given Tesla stock is down 3%. People tend to be more bearish when Tesla stock is down big on any given day. Now, message volume is higher today. Yesterday, it was extremely low at 16, which again makes sense. It was Sunday. It was Super Bowl Sunday as well. Add that to the mix. But message volume is still low today at 34, but the participation ratio is high at 57. And this really measures the amount of accounts that are talking about Tesla. So there's more people talking about Tesla today. but less overall messages. So maybe not just 1, 2, 3 couple people spamming messages all day. There's just a bunch of people talking about Tesla. Pretty interesting. Here today in After Hours, we will get 2 big AI names that will report earnings. That is Arista Networks and Cadence Technologies. Both of these stocks are pretty much at all-time highs right now. Arista Networks does a lot of your Ethernet kind of connections. They're partnered with Zscaler as well to try to make it end-to-end encrypted, and they're trading at all-time highs. Cadence Technologies makes an EDA machine that essentially creates parts of GPUs. At least that's from my understanding of it. I'm obviously not an expert in this field, but they're both trading at all-time highs. That could have a very negative impact to stocks like Nvidia if they do fall, because all AI stocks pretty much in general are trading at all-time highs. If you start to see some of them getting knocked down, that's not going to be great. And throughout the rest of this week, you're going to have a lot of big earnings. Tomorrow morning, Shopify, Datadog, Coca-Cola, Biogen, Marriott International, Hasbro, Moody's, and others. Tomorrow and After Hours, Airbnb, Upstart, Robinhood, Lyft, MGM Resorts, AIG, Instacart, and a couple other names. And to my point that I made in the beginning of this video, here is a Kia commercial for their electric SUV. I mean, there was quite a few electric vehicle commercials, and Tesla was not one of them. So you could make a conclusion as well that this was good for Tesla's competition, not so good for Tesla. They should have ran a Super Bowl advertisement. I think that could be having some small impact to Tesla stock today, but I, again, don't think it's the main thing that is hurting Tesla. BMW also ran a electric vehicle commercial as well. And this one's a little longer. This one's about a minute long. Pretty intricate commercial. But yeah, again, to the same point. You're seeing Tesla's competition do this, and Tesla did not. Tesla Australia and New Zealand says on their X account, battery rebates are now available in Queensland. And here's Elon Musk with his son here at the Super Bowl. Tesla's Giga Berlin factory will resume production tomorrow, February 12th, after a 2-week shutdown due to the Red Sea conflict. The plant manager said the supply chain is intact again and parts are available in sufficient quantities to be able to restart completely. Apparently, Snoop Dogg had a message to Elon. He says, this is a message for Elon Musk. Nephew, I need a Tesla. When your people came to my show, they told me they are gonna get me one. Still waiting. Do I have to buy one, or are you gonna send me one? Snoop Dogg said that to Elon. Elon says, everyone pays full price for a Tesla, including me. Mercedes-Benz is planning a new design language for its range of EVs. Its EV lineup will feature a less streamlined design in order to appeal to a wider group of customers, and some will ditch the naming system that uses EQ as a prefix. And Mercedes is throwing shade at BMW for nickeling and diming customers with subscriptions. This could also be part of why Tesla's stock is down about 2.5%, 3% or so today. GM confirms the 2024 Chevy Equinox EV will start at $34,995, $27,495 after the federal EV tax credit, with 319 miles of range, and it will be available later in 2024. Now, GM just said on their last earnings call they expect to be profitable on their EV sector of their business by the end of this year. If they're putting out an EV at $27,000, I think obviously Tesla is still the premium product, and we even see in China, Tesla is by far the premium product, and Tesla is still one of the top, if not, pretty close to the top EV brands, right behind BYD. I mean, is this really going to hurt Tesla that much? Probably not. I mean, the thing looks ugly in my personal opinion anyways, but it's still something that Wall Street's going to say, that's not great. Stellantis has announced they will adopt Tesla's North American charging standard. This means all major automakers that sell in the US have now officially announced NACS adoption. Stellantis customers will be able to access 15,000 plus superchargers in North America in 2025. Joe Tetmeyer says big news from Giga Texas today. The new vehicle outbound lot and transport truck pickup has been moved to the new west outbound lot. The old lot on the east side is now devoid of cars. This is a significant moment as production ramp capacity is linked to the new end of line and outbound lot operation. So essentially saying, hey, we're getting a bigger lot and potentially 2 lots. And yeah, I mean, this is a decent sized lot here. So hopefully we do start to really crank out some production at Texas. Texas is much bigger than Fremont, but Fremont still cranks out a lot more vehicles than Texas does. Now, Gary Black, in his latest X post in regards to Tesla, he says at $7 million for a 30-second Super Bowl ad, Tesla would have to sell 875 incremental cars at $8,000 gross profit per car to justify the cost of the ad. And the follow-up interest from Tesla paying for a Super Bowl ad would be huge. Instead, Tesla cuts prices by $1,000 per Model Y in the US for a month. That is $40 million spent. Short-term versus long-term thinking by Tesla's management. And again, there is this kind of superstition, I guess it is statistically factual, that companies that advertise during the Super Bowl, their stocks tend to do a little bit better afterwards. Which, I mean, makes a lot of sense, because if you're reaching hundreds of millions of people potentially watching the Super Bowl, that's a lot more people that get introduced to a new product, that can, think about a new product. Bunch of positives that go along with that. The fact that that translates into a stock doing better over the next couple of weeks makes a lot of sense. And I do think since Tesla has recently ramped up its advertising efforts, I think some people were expecting Tesla would run a Super Bowl commercial. I talked about it. I wasn't exactly expecting it. I was hoping for it, but I could see how some money managers out there are looking at Tesla now running 2,000 ads on Google and saying, hey, risk to reward, it makes a lot of sense to run a Super Bowl ad for $7 million for 30 seconds. Come on, I mean, that sounds like a no-brainer. I mean, Gary Black put it simply. You only have to sell about 800 vehicles to justify that, let alone what's the value created based on just the eyeballs seeing a Tesla and learning more about a Tesla. I mean, there's a lot of benefits to it. But in a nutshell, that could also be negatively affecting Tesla stock today. Google Trends data for the Tesla lineup shows some solid trends overall. The Cybertruck still being the biggest ramp here, sitting at about 24 on Google Trends. The Model Y at 35, the Model 3 at 36, and the Model X at 10. And Tesla continues to run about 2,000 different ads via Google. Global inventory numbers for the Model Y are falling from about $8,100 recently, now down to about $6,900. Maybe that $1,000 price cut to the Model Y is helping to boost some demand. Now the Model X inventory numbers rising a little bit to about 1,900. Almost said 19,000 there. Nope, 1,900. Model S inventories at about 1,000, and Model 3 inventories continue to creep down lower at about 808 in inventories globally. 10-year Treasury yields are down about 2 basis points today, which could help explain the outperformance of the Russell 2000, but certainly does not explain the almost 3% drop in Tesla stock. The 10-2-year yield curve inversion is still inverted 31 basis points, no change from Friday. And again, it's not until you go positive here that markets tend to crash or freak out about a recession. So we still have quite a ways until we go positive. Now, I will point out it's not just Tesla that is selling off. It's also Microsoft down 1%, Amazon down 1.33%. Even Nvidia hit a high today of about $746 today. It's now at $722, flirting between positive and negative for a vast majority of the day today. And Apple is even down about 1%. So you are seeing this rotation out of big tech, which again, money going into the Russell, that could be a sign of actually a good CPI report coming out tomorrow. So there's a lot of different signs that point to CPI could be good, CPI could be bad. There's just a lot of weird things going on in our markets today that are really unexplainable. The dollar continues on its trek higher. It's flat on the day today, but still a very upwards trend. And if we do get some downside here in the dollar, a better than expected CPI report would do that. Yeah, that would be great news for your interest rate sensitive companies. Overall, Tesla, I think, still goes higher from here, even if we do get a better than expected CPI report. And again, today would not be a good reference of this, but I do think Tesla has been reacting more so like an interest rate sensitive name. If you get a better than expected CPI report tomorrow, Tesla stock is likely to rise. Tesla's RSI is sitting at 36.31, which is still under the neutral level of 50. And the MACD went positive on February 8th. So the overall trend from the lows still remains bullish. Let me know what you think about all of this information down below in the comment section. In the next video, we have some crazy things to go over. Again, in depth, my expectations about the CPI report and what I think that will do to Tesla stock and the broader markets, as well as other things to discuss as well. So do not miss that video at 8:30 p.m. Eastern Standard Time tonight. You guys have a great rest of your day, and I will see you in the next one.